What's up, guys? Are you new to the stock market and wondering what's the easiest way to start investing? In this video, I will cover where a new trader should be focusing his or her attention in the stock market. All right, let's get into it. Welcome. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys checking out my channel. If you like any of the content that you hear or you find it valuable, please like, share, subscribe, and come back and see me. Today, we're going to be talking about where a beginner should be focusing his or her attention once they get into the stock market. Once you get into the stock market, a lot of times if you're new, it can seem kind of confusing. So many different companies, you don't know where you want to invest, which companies are good, and how to read balance sheets. All this can kind of feel a little bit overwhelming and confusing to a new investor once they do open up that first account for trading. For my new investors, the easiest way to start trading and investing is to start looking at ETFs. All right, what is an ETF? An ETF is an exchange traded fund that's on the stock market. It's traded, and in these funds, they have multiple stocks, multiple companies, multiple holdings in their portfolio, and they have several different investors feeding money into this fund. This allows the fund to buy into big name companies and buy massive amounts of shares in these companies. The fund is also managed by a manager, depending on who it is sponsored by, but they go in and they trade the companies within the fund. So all you have to do is just buy a couple shares of the ETF. They will allocate funds to each different company. So you don't really have to know which company is hot, which company is not. You don't have to do too much research on each company. And this is the easiest way to start investing for new investors. I definitely recommend ETFs for beginners because this way you can buy into a stock and watch how the market flows. Because you have to understand how the market flows. You could buy something one day and then the next day it tanks down, but it can still be a good investment. Just because it tanks for a week doesn't mean it was a bad investment. So that's why I say ETFs are the best way to start investing for new beginners and to feel the market out. Once you know how the market moves, then you can start investing yourself and maybe even branch off and start investing in individual stocks that you believe in. But I definitely think you need to know at least how the market flows and have an idea on which companies to go into. And you get all of that from the ETFs. You can kind of see who the ETFs are banking on. You can even see who the ETFs drop off their list. So these are certain things that beginners wouldn't know. But again, the ETF is managed by a manager and they are taking care of that for you. So it's definitely something that you should be looking into and focusing your attention on starting off. With that being said, I'm going to jump to the computer. I'm going to show you guys 6 different ETFs. 3 are going to be for growth and 3 are going to be for dividends. And these are ETFs that you can invest into and solely just buy this ETF for the duration of your investment if you want to. So this is kind of the easy route for the beginner, but also it teaches you how the market flows. All right, let's go to the computer. All right, now that we're on the computer, we're gonna take a look at some of these stocks. As you see, today isn't the best of days in the market, but that's why I say people need to feel how the market flows with an ETF because you have days like this. Some days where stocks shoot down, all your stocks shoot down, but I don't want anyone to get discouraged and then all of a sudden jump out of an investment when they should have just held on. And that's what an ETF would teach you. Because, yeah, one stock might go down and you might think that one stock wasn't a good investment, but if you got a collection of stocks like an ETF and it's going down, it's just something going on in the market. All right, so let's get into the first stock. The first ETF is SPY-G. SPY-G is SPRD Portfolio S&P Growth. All right. If you know about the SPY is the index of index. People use the SPY to see how the stock market is doing as a whole. So this is related to the SPY. It's SPY-G. And this ETF is into big name companies like Tesla, Apple, Alphabet, Facebook, Netflix. Got a lot of nice names in its holdings. And it's been doing great. For the last year, it's at 29.9%. So that's why I say it's a great growth ETF. That's almost 30%. 30% is a great growth for a year. Compare it to the average savings account that only give you 0.1% on your savings account. This is 30%. So it's pretty good. And as you see right here, where this dip happened, that's when COVID happened. You're gonna see that on almost every stock, every ETF. You're gonna see this dip, but this has already recovered from that and shot off. All right, so it's a great growth ETF. Make sure you guys check it out because it might be perfect for your portfolio. The next ETF is IVW, iShares S&P 500 Growth. This has a very similar portfolio to the SPY-G. It's basically a competitor of SPY-G, but it has a nice growth too. It's at 29.85. It's moving back and forth. It's alive, but it's doing pretty good, and it's a competitor of the SPY-G. So whenever you get an ETF that you do like, it's always good to compare it with a similar ETF so you can see which one better suits your needs. But again, this one is doing great. This might be another one to check out. The last ETF that I want you guys to check out is the Motley Fool Index. This is basically a mutual fund, but a mutual fund and ETF are very similar. This ETF is cheaper than SPY-G and the iShares Growth. It's even beating out those two ETFs. But again, it's a mutual fund. So it's a little more expensive when it comes to that expense ratio. But you guys know this is one that I hold and I've been banking on too. So I have 49 shares of the SPY-G in my Merrill account. I have Motley Fool. I have 13 shares of them on my Robinhood account. And like I said, those two are pretty good. But there's a reason why I got two different ones. But I'm going to talk about that in my next video. All right, so those are three growth ETFs. Now let's look at the dividend ETFs. The first dividend ETF is SPY-D. And this is another one that's related to the SPY S&P 500 high dividend ETF. So, like I said, if you really have faith in the SPY, this is the SPY's dividend collection. And if you look at the chart, this one hasn't recovered from COVID yet. As you see, it was around about $39.40, and right now it's at $32.42. So if you get into this one, you might can catch that growth for when you might can catch that growth of it going back to where it fell from. That's why they're called recovery stocks, because they haven't recovered from where they fell from just yet, but they are on track to. And the SPY-D, it has more conservative holdings than the SPY-G because of course it's for the dividends. Dividend ETF number 2, Noble, NOBL. This is the PowerShares S&P 500 Dividend Aristocrat ETF. I've done a cover on this in my previous videos. You guys know how I feel about this one. And this one is an ETF for dividend income. But what's nice about this ETF is that it's pretty strong. If you look at where it fell from, it has already recovered from COVID. All right, so this is a pretty strong ETF, and like I said, I'm banking on this one too. The last ETF is SPHD. I've talked about this ETF in my other previous videos. It's one that I'm banking on too, but this one is PowerShares S&P 500 high dividend, low volatility. So this one isn't meant to have any exponential spikes in it because it's supposed to be low volatility, but it definitely had a spike when COVID happened, but it hasn't recovered yet from COVID either. It was sitting at about 43.26 and it's currently at 37.04. So this is a recovery stock too. So I just went over 6 different ETFs, 3 growths, 3 dividends, but I have one more. This last ETF is in the middle of growth and dividend. It's Fidelity Quality Factor ETF. It's sitting right at 42.34 and it has already recovered from COVID, but you see the growth isn't really that strong. It's at 12.53%, which is a lot less than the growth stocks. But what's good about this ETF is that it gives a pretty good dividend. So I gave y'all all these ETFs to go out there and maybe do your research. Again, before you ever buy into one ETF, make sure that you compare them with multiple ETFs that's in the same field or peer group as that ETF, because they all are pretty much for the same thing, growth or dividend, but they all have slightly different holdings. So it might be something that you want to look at and take a look at yourself. All right. So yeah, guys, that was a quick rundown on 7 different ETFs that I think would be great starting places for beginners. ETFs are a great place to start in terms of investing, so you can fill out how the market flows. You have to understand how the market flows before you just go buy something and then you panic as soon as you see it drop. ETFs are strong. They are also a safer place for newer investors, so you just don't go diving into something. So definitely check these ETFs out. Make sure you compare them and see which one is best for you. Me, I have SPY-G, I have the Motley Food Index, I have Noble, and I have SPHD. Some of them are in different accounts, and in one of my accounts, I only have 5 stocks, and 2 are ETFs. I'm banking hard on 2 ETFs, and that portfolio is just going to basically work for itself. So definitely look into the ETFs, compare them, go with the one that you feel best for you. I'm not a financial advisor. I just give you guys game based on my experience and how I see it. If you like anything in this video, please like, subscribe, share, and come back and see me. The next video, I'm going to be going over the best trading platform. Best trading platform. Me, myself, I have 3, and I'm going to talk about the 3 that I have, because again, I only give you guys my experiences. So I'm going to be talking about the 3 I have: Charles Schwab, Merrill Edge, and Robinhood. So if you think that video sounds like something that you would be interested in, please come back and see me. All right. Thanks for tuning in.